Good morning, everybody. Um, this is Dan Sheridan at Sheridan Risk Management. And the topic I'm going to cover today is financing option trades. This is a term that I hear a lot. I've heard it on, you know, uh, TV programs on options. I've heard it on webinars on options. I've read it. And I want to talk about this concept of financing option trades, and maybe you've heard of this, and then I'll give you my 2 cents on it after. So I'm just using this as an example. So here's Apple, looks like it's going up. It's been going up. It's above, some of these shorter term moving averages. So let's just say you think, hey, I think it's going to continue up here for the immediate future. And so I come in and I buy a call vertical debit spread. So I come in and with Apple currently at $241, I go out to D's 20, 17 days from today, D's 3rd. I buy the 240 call and I sell the 250 call. This is called a bull call spread, a vertical debit spread. And this trade right now with us at 241, it's basically trading around $3.70. So you're $370. That's your total investment in this. The most you can make is if we're at 250 or higher at expiration, would be the width of the strikes is 10, less your debit of 370. So it'd be $6.30. So, you can make over 100%, 150, whatever that is, percent. Now, the purple graph, if we did this today, is the T+0 curve. That's how the trade looks today. The blue curve is how it will look at expiration. So you're 38 deltas long on this trade. You pay 370. That's it. The most you could lose is 370. And we're looking to make a really good yield on this, right? As it goes up near 270. I don't know, typically on a call vertical debit spread, I'd be looking to make at least 30 to 50%, right? Again, it's 30 or 50% of 370. So now this term financing a trade, which as a risk manager, I think is ludicrous, right? I get what people mean by that, but I would be expelled from the risk management if there was something like that. The risk management Elks Club of whatever town, Chicago. So I'm starting out with a trade of 370, right? My only risk is if we go down, that's my total risk. Now, again, we haven't even talked about risk management. We could get out. We could turn it into, I could turn into a butterfly in the downside. Many things you can do. I'm just looking about this concept of financing an options trade. So many people, this is prevalent out there, will say, look at this thing costs 370. It's a bullish trade. To finance this, I'm going to reduce some of my 370. So let's say I go here, the D's 20 is 17 days out. I go to D's 13, which is 10 days out, and I sell a put credit spread with the short at 235, 6 points below where Apple's trading at now. I sell a 2.5 point wide spread for 31 bucks. And basically, I sell 6 of them. 6 times 30 is 180. Let's make it 30. is 180 bucks. 180 bucks would be about half of 370. So I'm reducing my cost of 370 down by 6 of the 180, almost cut it in half, right? 360 would be in half. I'm reducing it. It sounds wonderful in a world of Willy Wonka, right? It sounds wonderful, right? If I can finance this, that could cost me anything. But what you're doing here, and this is a very small trade, right? So the plus is you're saying financing, if I sell 6 of these, I'm reducing my cost from 370 down to 190. Is that a good thing? Yeah. If I can reduce my cost, yeah. What's it cost me? What's the real cost of it? This is only a $370 trade, the vertical. That's it. It's 370. And there's things we could do if it goes against us. So if we go up and I make $100, it's 100 on 370, right? That's my total capital in it. But to finance this, we have to look at, well, what's the cost of 6 vertical spreads? 6 vertical spreads, 2.5 wide. If I just focus on that a second, my risk is going to be about $1,300. So to finance this was originally a $370 trade. I'm adding another $1,300. So 3 times that amount or more to $300 or $1,300 more to finance that. But my risk goes up, right? Before, I only had $370 of risk if it went against me to the downside. Now, when you look at this, when you combine it, my risk goes to $1,600. I just took my risk up 4 times. Now, sure, we can say, well, Dan, what you're not mentioning is this is 10 days. Is Apple going to go under 235 in 10 days? You could say, well, look, the delta is 18. That's only an 18% probability it will go underneath it. Do you want to get into that? If you're a 50, 60, 70-year-old, do you want to get into that, creating a risky venture to finance a cheap purchase? I would say in loud marquee letters, no way, Jose, right? And if we go up, technically your yield's going down because you had to throw in a bunch more capital to reduce the cost of your debit spread. Again, I see this a lot out there, and I think for retail traders, 50, 60, 70 years old or higher, all you need is one of these to go against you. And, you wipe out quite a few good trades. I just don't think I think there's plenty of other ways to, if this debit goes, if the vertical goes against you to the downside, what you can do. Maybe I'll cover that in a part 2. But I just wanted to point that out when you hear this thing, financing an options trade. And generally it's financing a call vertical debit spread on a bullish, I think Tesla or Apple's going up, and I'm going to finance it by selling some out of the money puts or selling some out of the money put verticals. And I just think as a risk manager, to increase your risk dramatically, to reduce your cost of your debit spread a little bit, I don't think a lot of retail traders understand that they've just jacked up the risk of that trade tremendously. So anyways, I hope if you have any comments, let me know. Dan at Sheridan Risk Management. We should in the next week have a December. We usually always have a really good December sale on our products and services, and that should be coming out this week. And, we'll come out with it. I'll talk a little more on that, but I just wanted to just kind of throw that out there, financing the options trade, because if you're around the next year, you'll hear this. You'll hear this in various venues on the internet. And at least I just want you to understand what it is. All right. Thanks, everybody. Have a nice day.